Thank you so much indeed for joining us on the program this evening. It is Money Talks. Money Talks is brought to you by CFA Society Nigeria, and it's a financial literacy program on this station every Monday at 4:30 p.m. Smart Uzechi is my name. You can call me Captain Smart, and I have a very special guest in the studio here this evening. Mr. Aig-Imoukhuede is the President, Funds Managers Association of Nigeria, FMAN. Mr. Aig-Imoukhuede is the President, Funds Managers Association of Nigeria, with over 25 years of experience as a diversified financial professional with expertise in wealth management, corporate banking, treasury, and capital market transactions. He began his career at Fidelity Bank in 1997, where he worked in various capacities before joining NBC International Bank, where he rose to become head of the construction/real estate investment banking unit. Afterwards, he joined the corporate banking directorate of First Bank of Nigeria PLC. He moved to Marina Securities Limited as director of the wealth management and business development, and later joined Coronation Merchant Bank as the head of Coronation Capital Market Division. Following the divestment of Coronation Merchant Bank from the asset management subsidiary in June 2019, Mr. Aig-Imoukhuede was appointed as the managing director of Coronation Asset Management Limited. He holds a bachelor's degree in business studies from the University of Buckingham and is an associate member of the Institute of Directors, Nigeria and UK. Funds Managers Association of Nigeria, FMAN, is a body of registered and regulated funds and asset management institutions in Nigeria. So, ladies and gentlemen, we have Mr. Aig-Imoukhuede, the President, Funds Managers Association of Nigeria, FMAN, as our guest on the program this evening. Hi, good evening to you and welcome to Money Talks.
Good evening, Captain. Thank you for having me.
So good to have you. And to you, the listener, you can join the program on telephone 0700 923 923 923. That's 0700 923 923 923. You can also call the number 0817 313 6193. Check us out on Instagram and Twitter at CFA Society NG. LinkedIn, Facebook, and YouTube is CFA Society Nigeria, or just go to the website www.cfasocietyng.org. This evening, we're discussing enhancing and protecting financial assets through diversification. Enhancing and protecting financial assets through diversification is our point of conversation on the program this evening. We'll get onto it when we return from this break. Please do stay with us.
We are professionals. We are impact driven. We are CFA Society Nigeria, a member society of the CFA Institute Global Network of Societies. Our mission is to promote the highest standard of practice in the Nigerian financial services industry and provide a vibrant community for our members. The CFA Charter signals the holders' commitment to professional excellence. As thought leaders, we collaborate with stakeholders to ensure adherence to ethical standards, better education for professionals, and to build market integrity. We are the leading voice for advocacy in the finance and investment industry in Nigeria. To partner with us or become our member, visit us at cfasocietyng.org for more details. CFA Society Nigeria, making finance a force for good.
Money Talks. Money Talks.
Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.
Welcome back to the program. Mr. Aig-Imoukhuede, the President, Funds Managers Association of Nigeria, FMAN, is a guest on the program this evening, and we're talking enhancing and protecting financial assets through diversification. That's what we're talking about this evening. Ike, one more time, it's good to have you on the program.
Thank you, Smart. Thank you.
So let's get to it really and set the ball rolling with some basic descriptions, like definition of terms for what we're doing here this evening for the benefit of our audience. They cut across the strata of society. What are financial assets really? Let's start from there. And then diversification, and how are they related, if they are?
All right. Thank you very much. This is a good conversation starter for this topic.
Oh, yeah.
All right. So financial assets really are tradable instruments that represent an ownership of an economic resource or a claim of future income or other financial benefits. All right. So they can be so these are assets that are bought and sold in financial markets across different countries. All right. So they are for individuals, corporates, and governments. I know that we have been seeing a lot of news ever since the new regime came in, and so we are seeing a lot of things happening in financial markets, and I think that this is a very good time for us to have a discussion about what we are talking about today. So those are financial instruments. Now, what's diversification? Basically, diversification is a strategy that involves spreading your investments across a variety of assets or asset classes that meet your risk, as well as, that would reduce your risk, as well as give you financial benefits at the end of the day. So if you hold a mixed bag of financial assets, it helps you reduce losses that may come from one allocation or one asset when you diversify. And this is something that's very necessary for you when you're holding financial assets. You can't speak too lightly about what they say about you can't put all your eggs in one basket.
Yeah. Okay, from this explanation, it does appear as though you have to be on a low, like a money bag, to talk about, diversification. Is that in the realm of the books, or is it how it is in real life?
The reality on ground is that you don't really need to have, in everything you do, you need to spread your risk. Understand what you're trying to achieve, and you can spread your risk as long as you have the ability to do so. Now, you are right to an extent that the more money you have, the more ability you have to invest in more assets and asset classes, as well as jurisdictions. All right? So jurisdictions are geographical, jurisdictions across the world. But even as little as you have to spread your risk. Understand your risk profile, understand your investment purpose, and then pick asset classes that meet your investment purpose. But then also to add to that, which is why I guess maybe that's why I'm here, FMAN, is that you can do this through other means other than doing it by yourself. You can invest in mutual funds and ETFs, which can help you spread your risk as long as you understand what they're doing. So you're giving it to a professional money manager to manage for you. And of course, you know that the entry points for these things are very low. So everybody can spread their assets by diversification.
It's really comforting to hear that this does not just apply to wholesale investors. The retail investors also can play there, and this is where the artisans come in. Can you tell us how these principles you've mentioned now, how it apply to the retail investors as to their investment?
All right, so I had already sort of
mentioned that.
Sort of let the cat out of the bag.
Yeah.
Mutual funds. All right, so every time, and I thank the Commission, that's Security and Exchange Commission, for making these regulations. Every time you, as an investor in Nigerian capital markets, want to make an investment, there's always a caveat that says, seek advice from your professional financial advisors. All right, and so what then we've done is we have a series of mutual funds that can help you hedge your risk. Now, mutual funds cut across the ones that everyone knows, which is the money market fund, which is a short-term fund dealing in the money market, so it has an average duration of 90 days. And then we have debt funds, we have fixed income funds, they're all fixed income funds, and then we also have balance funds. So balance funds would take a portion of both the equities and the debt. And of course, we have equity funds. So these are means that are very inexpensive for you to come in and enjoy the value of a professional financial advisor as cheap as people. I think we have mutual funds that start as low as 1,000 naira. And so from that perspective, it's not that expensive to get into this game.
So for a retail investor who perhaps is an artisan out there, and then he or she hears you have to seek the advice of your professional financial advisor. So he's already in the lower cadre. Is he not going to be worried that with this small money I get, I'm still going to have to pay this guy?
All right. I like to say to people that there's comfort in being in in company of others like yourself. And what that does for you is reduce the cost of entry. You use the cost that you would pay if it was just you. So if you come into, take for instance the mutual funds. I think that the most that can be applied on mutual fund is maybe they apply between 1 and 1.5% is what is the general market now. So for the advice that you're getting, trust me, you have someone who is professionally managing your money for you. Whether you're looking at funds, whether you're looking at equities, whether you're looking at fixed income, and they're doing this for you at that fee, believe you me, it's a no-brainer. What it does for you is it frees you to do what? Go about your own means of your own artisanry, all right, while enjoying the full value of people managing your money for you. So your money is always working for you, whether you deploy it to what you do as an artisan or whether you deploy it to the investments that you're making that someone is managing for you under a mutual fund status.
So this mutual fund is just a way of diversification, right? From what you've explained now. You need to walk us through how it works in these days of financial disasters. is this kind of, somebody be asking, is this a guarantee that if I diversify, I'm not going to be prone to these financial disasters, which people complain about every now and then?
All right. First of all, let me just take you through how mutual funds work. So a mutual fund is a professionally managed investment scheme, also known as a collective investment scheme, CIS. We have about 140 and growing in Nigeria now.
Wow.
And we also have at least, when I say this, you can see that we can do much more, but we have about 500,000 Nigerians invested in collective investment schemes. So it's it should be, and it will become even more and more now as we get more savvy as Nigerians in financial markets. It is one of the best means for you to manage yourself, manage your home while you are as an artisan. All right, so they are run by licensed asset management companies. And that brings a group of people, like I said, to invest their money in stocks, debt instruments, bonds, and other securities. And we do this under a trust deed. Now, the trust deed is what holds together everything that we do in the mutual fund, what you invest in, how you invest in. So the trust deed protects the investors in the mutual fund. Put it this way, a fund manager, in whatever he does, has to apply it according to the trust deed. And of course, because there's a trust deed, we have a trustee who ensures that the fund managers apply themselves in accordance with their trust deed. So what it is then is that a licensed fund manager would register with the Securities and Exchange Commission, which is our own apex regulator in Nigeria, and then of course we invest the public to invest in the funds. Now, deposits are received in a custodian bank, and this is quite important because we don't receive the money as the fund manager. It is received in a custodial bank, a third-party bank.
So the money doesn't stay with
money doesn't stay with the fund manager.
Okay.
The money is protected through the custodian. All right, and so this gives you a protection on your layer of funds. Of course, the deposits, the investments are made in permissible instruments in accordance with your trust deed. All right, so when we invest, we share with the every investor we make. We work with the trustee, and the trustee is required to, because they are working on behalf of the investors, they on a regular basis review what we're doing and make their independent reports to the Securities and Exchange Commission on what we're doing. So these are levels of protection. All right. So the returns on investment are then distributed amongst all of the members of the collective investment scheme, which is the unit holders of the collective investment scheme as at the time of the payment of the returns. Now, there are several ways in which they return. If it's a money market fund, it returns every 90 days. Some fixed income funds and some of the other funds return half yearly or annually.
All right, in case you're just joining us now, enhancing and protecting financial assets through diversification is our subject of discussion here. And Aig-Imoukhuede, the President, Funds Managers Association of Nigeria, FMAN, is our guest on the show. You can call us now, 0700 923 923 923. That's 0700 923 923 923. You can also call 0817 313-6193 or send us a WhatsApp message to that number. That's 0817-313-6193, a WhatsApp message. If you can drop a voice note, not more than 45 seconds, you can also do that. We're talking finance here this evening, enhancing and protecting financial assets through diversification. And one of the major ones we've mentioned here this evening is mutual funds. So let's go as the calls are coming, is to ask you to help us highlight, for the benefits of the listener out there, any risks. Because when people talk about these funds, they say it as though it's a walk in the park. I mean, everything is just so green and all of that. Benefit. Let's put the benefits side by side, the risks when we're talking about mutual funds versus some other financial investment instruments out there.
Okay. So let me see. Let me first speak to the benefits of mutual funds. All right. So mutual funds are very easy entry and easy exit. With the advent of technology and digitization, you can subscribe to many of the fund managers. You subscribe through the app. It's a one-time thing, and when you want to redeem or you want to invest, you can invest through your app. So it's not a story. It's not a case of storytelling. You get your money when you want it. The regulator in itself has given us a period of maximum of 4 days from the day you request for your money. But I can assure you that many of the fund managers, including the firm that I work for, we give you same-day redemptions.
Wow, no stories.
No story.
Nothing like, can you come back tomorrow?
No story. Okay. And so because of that, and of course I've already spoken to the fact that they are professionally managed, they give you liquidity because of the ease in and ease out. There's a low cost to entry. There are higher returns than if you manage it on your own. Now, when I say higher returns, let me just correct that before I'm told that I'm telling you that mutual funds give you the best returns.
Okay, Ike, maybe you just hold that thought. We'll have a call on the line. Hello, good evening to you. Hello, good evening. Yes, we can hear you. What's your name and where are you calling us from? Oh, so sorry, we lost the call there. The number to call 0700-923-923-923. There's also 0817-313-6193. So you may continue.
Yes. So I'll speak to liquidity. So like I've explained, so because you can come in and out on a daily basis, it provides liquidity to investors, and so you have easy access to your money. They're affordable. I've spoken to the fact that they're affordable, and of course there's a variety. There are different kinds of mutual funds, and the mutual funds are meant to meet your risk and your return expectations. So if we look at, I tell people, and this is very necessary, every time you want to make an investment, understand, 1, your risk profile, 2, your investment purpose. Your investment purpose will speak to the kind of investments you want to make. They speak to the duration of your investments, because if we understand, so really basically it's about understanding what your cash flow is, what your spend is, how you want to spend, and so we pick the right investments that match your spending needs over a period. Of course, like we have automatic reinvestment, as you can reinvest as you collect your dividends, you can reinvest the whole thing automatically. But then also mutual funds are very transparent. I know that very soon I'm going to get calls about risk management and transparency.
In fact, one of those calls here now. Hello, good evening to you.
Good evening, sir.
Thank you so much for calling.
Is that Captain Smith, sir?
Yes, sir. Welcome. What's your name?
My name is Mechanic John, sir.
Go ahead, Mechanic John.
I'm so happy talking to the person, Mr. Aig-Imoukhuede. I'm so happy with the discussion, sir. But the problems we have in fund management in this country, sir, is most of our banks, when you give them opportunities to help people, they capitalize on it and give it to their friends. How do we cover up with such? Because the way you describe this, the mutual fund management, it's a very good thing for professionals like us. I'm a mechanic. I used to run a workshop. For years, I did some business very well until Lagos State government destroyed my properties along the road. Sometimes, if you're in a sensitive positions to get certain things from these managers, they sometimes give you conditions. At the end of the day, they don't give it out. How do we go about this?
Okay, thank you, Mechanic John. We appreciate your call.
Thank you, Mechanic John. All right. So what I hear you say is that you have had investments with professional money managers and you've had difficulty getting your money out.
He's no longer on the line. Yeah, that these people that they don't give these monies to those who really want them. That they give out to their friends and all of that. That's what he's trying to say.
Okay. So you know that if you note the caveat, he said actually was banks and not mutual fund managers, not collective investment schemes. So I've spoken to the fact that every mutual fund has a trust deed, and we adhere to the trust deed. I can assure you there's no trust deed that tells you that you're going to give your money to so and so. And of course, remember that the mutual funds are bucketed under the certain types of mutual funds, which would be a rate, real estate interest investment trust. It could be an infrastructure fund. It could be an Islamic fund. It can be the Sukuk funds. It can be impact fund. But they all have a purpose, and that purpose is spoken to in the trust deed. And we can only invest in accordance with the trust deed. Note that we are not just properly regulated, so we make weekly, monthly, and quarterly returns to the apex regulator. Our trustees also make the same returns to the regulator, which means that the regulator has a line of sight of everything that we do, and the regulator comes hard on everything that we do. So the question now is, who did you give your money to? Did you give your money to a regulated asset manager, or did you give your money to someone who is not regulated? That's the question. And to answer that, maybe I should just quickly speak to this. All right? So any firm that you reach out for investment, you need to confirm if the firm is registered with the Fund Managers Association of Nigeria, FMAN.
Wow. There's a certificate they'll cite?
Our website has a list of fund managers that are registered with us. You also have the list of fund managers that are registered with the Security and Exchange Commission. So if you go to the Security and Exchange Commission's website, www.sec.gov.ng CMOS/CMOS, you would see all and ascertain all registered capital market operators, particularly fund managers. Also, if you check our website, which is www.fman.com.ng members directory, you will see all our members. You can also email us at info@fman.com.ng, or you can call us on 0909 114 3207 or 0909 114 3183.
All right. Okay. When we talk about these sort of funds and investment, everywhere you turn, almost every street you turn now, there's somebody there who is floating one of these kind of firms, all that. But let's hold that. I'll get back to that question. Hello. Good evening to you.
Captain Smart, good evening, sir.
Thank you so much for calling. Tell us your name and where you're calling from.
James Ebola from Oshodi.
Go ahead quickly, James.
Okay, I want him to help me answer this question because I get a lot of this several times. You see government bond, treasury bills, and all sorts of things. So I want you to help me understand this issue of mutual fund. If I buy government bonds or a form of treasury bills, does that mean is it a form of mutual fund? And I don't know, this mutual fund, if I put money there, do I get some benefit, like some interest on top, or what? I don't know, but I came in a bit late. I don't know if you've spoken about that already. Thank you.
Okay, James, thank you so much. Maybe in addition to that, Ike, the question I was trying to ask you, so some of these so-called fund managers or mutual fund managers who are promising bogus interest rates right there, these calls are coming in to disrupt over saying that you people left it late. Let's just take one more call. Hello, good evening to you.
Good evening, Dr. Smart. Good evening, Mr. Ike.
Good evening.
Okay, my name is Selma. I just want to say thank you. At least the fact that we have a website that we can check to be sure that some of these fund managers are registered. That's a plus for me. Thank you very much.
Thank you so much.
Thank you so much. And somebody's trying to give you a math job right here. This person says, kindly ask your guest how much I should expect upon liquidation if I fix a sum of 200,000 for 2 months in a second generation bank. I just got a notice today of litigation interest and I'm very, very disappointed. Not sure what that means really, But I was going to ask you, because this question is very important, and I'll appreciate if you can answer like in a minute. These people promising very bogus interest. If I have money to invest somewhere, I'll be looking for the highest interest rate, highest interest accruable to me, as high as possible. And there are people out there promising these bogus investments, say, okay, if you give me this, I'm going to pay you credit interest that is so huge, and people are trooping to those places, and before you know it, either those shops are closed or those sites are no longer accessible. How do the public differentiate between those who are there, promising these huge investments, and the real fund managers that they actually keep their monies and they can have a level of comfort?
Thank you for that question, Captain. All right, so listen, I've spoken to the fact that everyone who manages mutual funds is registered by the SEC. Now, if a fund is not registered by the SEC, I would advise you not desist from investing in such a fund. I say categorically, do not invest in any fund that is not registered with the SEC and is not registered with, and the company is not registered with the Fund Managers Association of Nigeria, FMAN. Desist from investing there. All right. So look, the underlying thing that the SEC does, and we do that too, is to support the investor and protect the investor. That's what we're here for, to ensure that the investor is protected. Now, ask yourself, you have money, you have 200,000, as this gentleman said, and a bank would typically give you on 200,000 maybe 5 or 6% return. All right, you can get a double-digit return from a mutual fund. A money market fund is a short-term fund. Of course, the fixed income funds are for longer. You can get a lot better return, but it's over a longer period. And I have to quickly say this because in Nigeria, let us know that short-term investment is not 1 month, and mid-term 3 months, and long-term 6 months. That's not what it is. So when we speak to these things, we're speaking to the real durations for investments. All right? So the typical money market fund gives you anything from between 8 and 12% return. What does this mean? This means that it gives you a bit more value because it is professionally managed than you get from a fixed return with a money deposit bank. All right, and those are the sweeteners for. And how do we do this? We take the money, and I like the fact that someone has spoken to treasury bills, bonds, and what have you. Yeah. We take the monies and we invest in all of these programs, all of these instruments on your behalf, in accordance with what we have written we will do in the trust deed, following the allocations that are 1, approved by the SEC, 2, approved by the fund, because we submit our allocations. Of course, we change them from time to time to meet how the market's realities are, but we submit them and they are properly managed. We also have benchmarks that we are benchmarked against. So we benchmark ourselves against what instruments we would typically have, most of the time sovereign, what it returns over that period. So the question is this: if your sovereign or the benchmark for such investments is 12%, and I'm giving you 15%, why are you looking for someone who is giving you 30? What are they doing that is going to give you 30%?
They're looking for more money.
That's the question you have to ask yourself. And so, I tell people there's nothing like it's too good. It is called it's too good to be true. Let us remember that thing when we say it's too good. It's too good. If it's too good to be true, if you call your professional financial advisor. If you don't want to, you can call the FMAN. We have phone numbers, we have the website, send us emails. We are here to protect the investors.
Thank you very much. And more messages and phone calls we can't take anymore, but let's just squeeze this one in. Good evening, Captain Smart. Please ask your guest what happens to one's investment in the event of change in governmental policies. This is Louis the 13th. 5 seconds.
5 seconds. Louis the 13th. I like your drink. Anyway, what it then means is that as changes in policy come, we also change our allocations. That is why you're giving your money to a professional to manage for you. Right. We understand the future. We look into the future. We expect certain things to happen, and we start to move ourselves around in anticipation of what will happen to ensure that we give you the best benefit of your returns.
Thank you. And there's somebody else who says you give him his first job. So he's in Las Vegas. That's where he's listening from now. And that the interview was thorough. That's what he said, was thorough. He's listening from Las Vegas. Aig-Imoukhuede, thank you very much for coming on the show this evening. We appreciate you for your time.
Thank you so much, Captain Smart.
That's our package today. Join us again next Monday at 4:30 p.m. Till that time, keep your money safe.